What if I told you there are 8 high-growth semiconductor stocks quietly generating massive profits, poised to dominate the market in 2025? While everyone chases headlines, savvy investors are zeroing in on these industry titans. Today, I'm revealing the crucial players that are not just growing, but are deeply profitable, driving innovation in AI, automotive, and data centers. One of these companies, for instance, is absolutely essential for every advanced AI chip manufactured globally. These are the 8 high-growth semiconductor stocks that are profitable in 2025 and poised for explosive performance. Number 8. Qualcomm Incorporated, ticker QCOM. Qualcomm is a semiconductor powerhouse fundamentally powering mobile devices and rapidly expanding into critical sectors like IoT, automotive, and cloud computing. The company recently showcased robust financial performance, with Q3 2025 earnings per share hitting $2.77, beating analyst estimates, and revenues climbing over 10% year-over-year to $10.37 billion. Qualcomm's strategic diversification is aggressive, aiming for a 50-50 revenue split between handsets and non-handset segments by 2030. Its automotive sector is a key growth engine, with revenue surging 21% year-over-year in Q3 2025, boasting an impressive $45 billion design win pipeline, including $15 billion for advanced driver assistance systems. Partnerships with BMW and Mercedes-Benz, integrating Snapdragon digital chassis, are driving this momentum. IoT also saw a 24% revenue increase, fueled by a focus on edge AI. The recent acquisition of Arduino aims to democratize access to Qualcomm's advanced AI and computing products for a global developer community. Furthermore, Qualcomm is making significant inroads into the AI PC market with its Snapdragon X Elite series, aiming for integration into over 100 PC models by 2026 and targeting $4 billion in PC revenue by 2029. Despite an ongoing antitrust lawsuit in the UK, analyst sentiment remains largely positive, with an average buy rating and significant price targets, underscoring Qualcomm's successful diversification and strong financial footing. Number 7. ASML Holding NV, ticker ASML. This Dutch multinational is the undisputed leader in lithography machines, the complex systems essential for mass-producing semiconductor chips. ASML holds a near monopoly in extreme ultraviolet, or EUV, lithography, a cutting-edge technology vital for creating smaller, faster chips. Analyst firms like UBS have reiterated a buy rating, increasing price targets to €940, anticipating solid Q3 results and robust growth through 2027, bolstered by AI-led memory demand. HSBC also raised its price target to €1,018, projecting memory chips to contribute 36% of ASML's 2025 system revenue. The company is innovating with high numerical aperture, or high-NA, EUV systems, already yielding breakthroughs for sub-2 nanometer process nodes, crucial for future AI and quantum computing. Initial high-NA EUV machine deliveries are slated for 2025. Financially, ASML increased its quarterly dividend and strategically invested €1.3 billion in French AI startup Mistral AI. However, geopolitical tensions and proposed 30% US tariffs on European imports could introduce headwinds for 2026 growth, leading some, like New Street Research, to downgrade the stock to neutral due to valuation concerns. Despite these risks, ASML's indispensable technological leadership positions it firmly in the highest tiers of the semiconductor industry. Number 6. Applied Materials Inc., ticker AMAT. This company is a critical provider of advanced equipment, materials engineering services, and software that semiconductor and display manufacturers rely on to produce nearly every new chip and flat panel display. Applied Materials recently showcased robust operational strength, reporting Q3 2025 earnings per share of $2.48, surpassing expectations, with revenue hitting $7.3 billion, an 8% year-over-year increase. Their non-generally accepted accounting principles gross margin improved to 48.9%, signaling strong financial health. The company secured a $2 billion revolving credit facility, bolstering its financial position for general corporate purposes. On the innovation front, Applied Materials unveiled new semiconductor manufacturing systems explicitly designed to enhance AI chip performance, including the Kinex bonding system for advanced logic and memory, the Centra Xterra EPI system for 2-nanometer gate-all-around transistors, and the Provision 10 E-beam metrology system for complex 3D chips. However, new U.S. export restrictions on advanced chip-making equipment are projected to reduce China-based revenue by an estimated $600 million for fiscal year 2026, posing a challenge. Despite these geopolitical headwinds, analyst consensus leans towards a moderate buy rating, with average price targets around $196.85, reflecting cautious optimism for AMAT's leadership in materials engineering and advanced packaging. Number 5. Lam Research Corporation, ticker LRCX. Lam Research is a global supplier of wafer fabrication equipment and process technologies, enabling the creation of smaller, faster, and more powerful electronic devices, essential for the advanced chips used across every industry. The company's stock has surged over 85% since March 2025, largely driven by soaring demand in the AI and memory chip sectors. Lam reported strong Q2 2025 financial results, with revenue reaching $5.17 billion, a 33.6% year-over-year increase, and EPS of $1.33, both significantly exceeding analyst estimates. With nearly every advanced chip utilizing Lam's technology, its critical role in the semiconductor ecosystem is undeniable. Analysts generally maintain an optimistic buy rating, with price targets up to $160, reflecting confidence in its market share expansion. The company is actively capitalizing on the AI boom, launching new products like Vector Teos 3D, a deposition system for advanced chip packaging in AI and high-performance computing. Despite regulatory uncertainties in China, projected to reduce 2025 revenue by $700 million, Lam Research is confident in outperforming the broader semiconductor market. Upcoming Q3 2025 earnings are expected to show continued significant year-over-year growth. Strong institutional investor confidence, with Norges Bank and Vanguard Group holding substantial stakes, further underscores its positive financial trajectory. Number 4. Micron Technology Inc., ticker MU. Micron is rapidly transforming from a traditional cyclical memory business to a pivotal player in the burgeoning artificial intelligence infrastructure market. The company recently delivered record-breaking fiscal Q4 and full-year 2025 results, with full-year revenue soaring to $37.38 billion, a 49% year-over-year increase, and Q4 revenue hitting $11.32 billion, exceeding analyst expectations. A key driver of this exceptional performance is Micron's leadership in high-bandwidth memory, or HBM, critical for AI accelerators. Remarkably, Micron's entire HBM supply for calendar year 2025 is already sold out, and they are actively engaging customers for 2026 demand. They've begun shipping samples of their next-generation HBM4 memory, boasting industry-leading performance. This strategic focus has dramatically boosted profitability, with gross margins expanding significantly to surpass 50% in Q4 2025, a first since 2018, and projected to remain high. The Cloud Memory Business Unit, encompassing HBM for AI, saw its quarterly revenue skyrocket by 214% year-over-year. Analysts are responding with increased optimism, driven by expectations of sustained double-digit price increases and AI's long-term potential. While capital expenditures are increasing to support HBM growth, Micron generated a robust $3.7 billion in free cash flow in fiscal 2025, with further increases anticipated for 2026, positioning it for continued strong growth. Number 3. Advanced Micro Devices Incorporated, ticker AMD. AMD has cemented its position as a formidable player in the burgeoning artificial intelligence market, highlighted by a landmark strategic partnership with OpenAI. This multi-year agreement commits AMD to supplying up to 6 gigawatts of its Instinct series GPUs to power OpenAI's expanding AI infrastructure, with initial deployment slated for mid-2026. This deal alone is anticipated to generate tens of billions of dollars in revenue for AMD, potentially exceeding $100 billion over 4 years, significantly bolstering its data center business. This partnership is a critical validation of AMD's AI strategy, positioning it as a serious contender to Nvidia's dominance and potentially ushering in a multi-vendor era for AI infrastructure. Financially, AMD reported strong Q2 2025 revenue of $7.7 billion, a 32% year-over-year increase. They forecast Q3 2025 revenue of approximately $8.7 billion, representing a 28% year-over-year growth, with strong double-digit growth projected for both its data center, fueled by the MI350 ramp, and client gaming segments. Analysts are highly optimistic about long-term growth, with AI-related revenue projected to surge to $9.5 billion in 2025, and free cash flow potentially climbing to over $16.2 billion by 2029. While the recent stock surge, with upgrades to targets as high as $300, might have priced in much of the positive news, AMD's aggressive product roadmap underscores its commitment to AI, targeting tens of billions of dollars in annual AI revenue, with its MI350 and upcoming MI400 series GPUs. Number 2. Taiwan Semiconductor Manufacturing Company Limited, ticker TSM. TSM continues to demonstrate robust financial performance, largely propelled by insatiable demand for advanced artificial intelligence chips and high-performance computing applications. The company's preliminary Q3 2025 revenue figures already exceeded analyst expectations, reaching approximately $32.44 billion, marking a substantial 30% year-over-year increase. September 2025 alone saw a 31.4% year-over-year surge in revenue. This strong growth underscores TSM's critical role as a primary supplier for leading AI accelerator designers like Nvidia, AMD, and Broadcom, alongside its continued production for major clients such as Apple. TSM is planning investments between $38 billion and $42 billion in 2025, primarily dedicated to advanced manufacturing processes. This includes the ambitious goal of constructing 8 new wafer fabrication facilities and 1 advanced packaging plant in 2025, with mass production of cutting-edge 2-nanometer chips slated for the same year, building on the successful ramp-up of 3-nanometer technology. A significant portion of this expansion is directed towards diversifying its global footprint, notably with an additional $100 billion investment in U.S. semiconductor production, bringing the total commitment to $165 billion. This monumental investment will fund 3 new production facilities, 2 advanced packaging plants, and a research and development center in Arizona. Investor confidence remains high, with TSM stock up over 54% year-to-date, supported by a recent dividend increase and an overweight rating from Barclays with a $325 price target. Number 1. Nvidia Corporation, ticker NVDA. Nvidia recently achieved a staggering market capitalization exceeding $4.5 trillion, briefly making it the world's most valuable company. This unprecedented growth is overwhelmingly fueled by its dominance in the data center segment, which accounted for an astonishing 88% of its $46.7 billion total revenue in the second quarter of fiscal year 2026, marking a 56% year-over-year increase. For the first 9 months of fiscal 2025, revenues soared to $91.2 billion, a 135% year-over-year surge, underscoring the relentless demand for its high-performance GPUs, essential for AI training and inference, where Nvidia commands an estimated over 90% market share. Analysts project Q3 FY26 revenue to surpass consensus, with some expecting $56.3 billion and an EPS of $1.28, driven by an anticipated shipment of 30,000 AI server racks in 2025 and over 50,000 in 2026. Innovation remains at the core of Nvidia's strategy, with significant product announcements at both CES and GTC 2025, including its highly anticipated GeForce RTX 50 series GPUs, powered by the new Blackwell architecture, boasting up to 92 billion transistors. Wall Street analysts maintain an overwhelmingly bullish outlook, with a consensus, strong buy rating, and price targets as high as $275, dismissing deceleration fears and projecting Nvidia could capture over 40% of the total AI infrastructure market by 2030. Now let's take a quick look at the numbers side by side. Starting with current prices, ASML holding is by far the most expensive at nearly $990, while Qualcomm and Applied Materials sit comfortably in the $160 to $210 range. When it comes to market cap, Nvidia is the undeniable titan at a staggering $4.6 trillion, showcasing its incredible dominance. Taiwan Semiconductor follows as a trillion-dollar giant at $1.6 trillion, while the rest are in the hundreds of billions, with Qualcomm, Applied Materials, and Lam Research clustering around $170 billion to $180 billion. Revenue figures are equally impressive. Nvidia leads the pack with a massive $130 billion, followed by Taiwan Semiconductor at $90 billion, underscoring their scale. Micron Technology, Qualcomm, and ASML also show substantial revenues, ranging from $31 billion to $39 billion. Gross margin is where profitability gets interesting. Nvidia boasts the highest at nearly 70%, reflecting its unparalleled pricing power and technological lead. Taiwan Semiconductor and Qualcomm also exhibit robust margins above 55%, indicating highly efficient operations. Even with lower margins in the 40s, Applied Materials, Lam Research, and Micron still demonstrate healthy profitability for their capital-intensive businesses. For dividend investors, Qualcomm offers the highest yield at 2.1%, while TSM and ASML provide respectable yields around 1% or less. Nvidia and AMD, typical of high-growth tech companies, are currently reinvesting their profits back into the business, hence no dividends. Finally, earnings per share tells us who's truly profitable on a per-share basis. ASML leads with a whopping 26.10 EPS. Qualcomm and Taiwan Semiconductor also show strong EPS figures around 10.37 and 8.78 respectively, demonstrating consistent earnings power. Nvidia's $3.51 per share earnings might seem lower in comparison, but given its colossal market cap, it still represents immense overall profitability. So these are 8 high-growth semiconductor stocks that are consistently profitable heading into 2025. Which of these semiconductor giants do you think is best positioned to capitalize on the AI boom in 2025, and why? Drop your thoughts, insights, and predictions in the comments section below. And don't miss our video right here on 6 AI stocks with explosive growth potential for 2025.